Hello and welcome to Market Watch for the end of the week. That started on the 11th of December 2017. I called this week, well, pretty much Thursday, Super Tuesday, and it really was there. And then it realistically came on to Thursday in terms of what was going on. Big movements this week, and I need to sort of move and have a look at what happened over in the States because it has probably shifted a lot of people's opinions about where we're heading. It also shifted a lot of people's expectations around what 2018 will bring. So looking at the Fed, nothing really changed in terms of the Fed dot plots. They raised rates as expected. However, it was more the statement, and particularly the statement around inflation, that probably shifted the market towards a more dovish stance on what was going on. And their inflation issue is the same as what we're experiencing here. They've got relatively good, in fact, I'd actually argue strong employment. Their outlook for growth is reasonable. They're seeing wealth creation. Consumption's actually better than it is here, but wages aren't materializing and inflation is really anemic, and they now don't forecast their inflation to reach their mandate, which is 2%. Ours is 2 to 3% core inflation till 2019, and they're still forecasting the probability of 3 rate rises in 2018, but the market is not. And they are now only giving it a 65% chance of 2 rate rises, 1 definitely factored in, but no more than that. And realistically, that therefore put a whole heap of pressure in the US dollar. And having a look here, this chart here is actually the Aussie. And the reason I put the Aussie up there is it's probably one of the more violent movements I've seen against the Aussie in a while. And it's a huge bid on the Aussie side. It's a bit of a dilemma for us. We need a lower currency, and I've been speaking about this for several months now, but that movement off the back of the Fed on Thursday was ginormous, and it's continued to do so, and it therefore means that this is probably one of the best years we've had against the US dollar in the post-GFC world. We're going to, and currently looking like being up around about 6%, and that's all very interesting. Tuesday, got a little bit of data from here as well. Thursday, we got our employment, and that's the other part to really concentrate on. Our employment numbers were again really strong. We've now added 375,000 jobs in the 12 months to November, and that is the best year since 2005, and we will therefore break that record at the current sort of rate. And if you translate that through, unemployment at 5.4% is really solid as well, and participation picked up, which is also that second leg we got in the Aussie that you can see on the chart before. Again, the catch and the big catch to this is wages and what that therefore means in 2018. But this week it has been around that Aussie-US pair, and clearly it's been a fairly positive week for the Aussie and a negative one for the US.